Hi friends, I am Dr. Velayudhan, Faculty of IBS Kayangulam. IBS is conducting classes for JAIIB and CAIIB. My part is on JAIIB. I am taking Accounting and Finance. Today I am going to explain a chapter from Module C, Joint Stock Companies. You know what is joint stock company? Joint stock companies are companies which are registered under Indian Companies Act 1956 or 2013. Generally, for accounting studies, companies are classified into two: private company and public company. We must know the difference between public and private company. Private company, by its articles of association, 1. Restricts the right of transfer of shares. Restricts the right of transfer of shares. You cannot transfer the shares in a private company. Limits the number of members to 200. The minimum is 2. Third one is prohibits an invitation to the public to subscribe its shares or debentures. These are the three characters of private company. 1. Shares are not transferable. Maximum number is only 200 and the minimum is 2, and they cannot invite public to purchase our shares, that is private company shares. But in the case of public company, shares are freely transferable. They can invite public for the subscription of shares. Minimum number of members is 7 and the maximum is unlimited. These are the major difference between public and private company. There are other companies, government companies. Government companies means more than 51% of capital is owned by either state or central, or partly by state or partly central, or whatever may be. Then holding company. If a company holds more than 51% capital of another company, that is known as holding company, and the latter company is known as subsidiary company. Example, State Bank of India, State Bank of Travancore, Mysore, etc. Then foreign company. Foreign company means having a registered office in foreign country and doing business in other countries. Then statutory companies which are registered under the Special Act of the Parliament, State Bank of India, Food Corporation of India, Unit Trust of India, etc. All this you know. Here mainly we are dealing with public companies. As you know, the organization, different organization in our market is sole trader, partnership business, joint stock companies, cooperative societies, and government enterprises.
Please subscribe, like, amp, share.
Each one has its own advantages and disadvantages. If we want to start a business, if I am a sole trader, individual, I have a limit to invest my capital. I cannot start a big business. If it is partnership also, there is some restrictions. Who will take the risk? So there also we can invest capital to a certain extent. But in the case of joint stock companies, you can collect capital easily. That is why we are going to form joint stock companies. Joint stock companies means we are promoting a big companies, manufacturing companies. It requires heavy capital. Capital for what? To purchase machinery, building, human resources, transporting system, communication system, labor. For all this, we need heavy amount to invest. So we need heavy amount of capital. How can we collect? An individual cannot invest. Partnership cannot invest. Only from large number of persons we can collect the capital. That is why this type of organization is formed: joint stock companies, private companies, and public companies. Suppose, in our example, we are going to start a manufacturing company. Say manufacturing of air conditioners. For this air conditioning means don't think that it's only used in house. Different type of air conditioners are there, and it requires heavy capital, The plant is to be imported from foreign country. You have to find the best place for fixing this, and you have to find the labor, people, transport, communication, etc. etc. It requires heavy capital. So how can we collect this capital? To start such a type of business, I told you heavy capital is required. So the best form of organization is either private company or public company. Now we are going to see the public companies. See, whether it is private company or public company, we have to register compulsorily. That means registration is compulsory under Indian Companies Act 1956 or 2013. Such registered companies have to use the word private limited as a part of private company, simply limited as a part of their public company. So if the word simply limited is there, it is public company. Private limited means it is a private company. To register these companies, we have to execute, we have to submit some important documents like Memorandum of Association, Articles of Association, and other papers. Here, for our accounting purpose, our study purpose, we are going in detail what is Memorandum of Association. All these documents are required for opening a current account of joint stock companies, that you know. To open a current account in a bank of companies, we have to demand Memorandum of Association, Articles of Association, company's prospectus, registration certificate, certificate of commencement of business, board of directors resolution, etc. etc. So here the most important document is Memorandum of Association and Articles of Association. Let us see what is Memorandum of Association.
If you like this video, don't forget to subscribe, like, share and comment. See you in next video.